I've been able to make about $19,000 in the last 20 trading days. I've been documenting it all on this YouTube channel day by day, meticulously tracking all of the trades and their performance. And after 160 trades, I'm sitting here and I've been able to achieve just about $1,000 profit per day with less than a 50% win rate. And you can see the equity curve here. So in this video, we're going to break down the 4 indicators that I've used. I'm going to show you how to apply them on your chart so you can hopefully achieve this consistency yourself. So you're going to want to pull up 4 charts. Now I'm using Thinkorswim. You can do this on any platform you have. It's easier to have 4 charts pulled up at once so you can look at all of these indicators as the market is open, as we're taking our trades together. If you only have one screen, it's not the end of the world. If you can only do this on one chart, again, from a workflow perspective, it's going to make it a little bit easier to have it on all 4. So first off, we've got our 30-minute chart on the top left, our 10-minute chart on the bottom left, our 5-minute on the top right, and our 5-minute on the bottom right. Now, those are the 3 time zones that we're going to be using on our 4 charts. Now, what is important next is that on our left charts, we're going to want to look at bar charts, okay? Not candle charts. You can see how these are bar charts. Now, in order to do that, you're just going to click on the style and you're going to go to chart type and we're going to want to choose bar. Okay, so make sure that is going to be for the top left 30-minute, the bottom left 10-minute. Now on the top right chart here, we are going to want to have our candle chart, which is just going to be, again, under candle. Okay, and this is going to be on our 5 and on our bottom 5 as well. Now let's start with our top left. We're going to want to pull up our studies here, and you can do this on any platform. We're going to want to apply 2 exponential moving averages. These are going to be EMAs. So you're going to type in expo and you should see exponential moving average. We're going to add 2 of those. Now what you're going to want to do is you're going to want to open them and we're going to change the price to say, instead of close, we want it to calculate the high plus low plus close divided by 3. Now, our first moving average is going to be the 65. So you're just going to change the length to 65. Perfect. Once that's done, you're going to open up the second moving average. Same thing here under price. We're going to change it from close to high plus low plus close. And this is going to be the 33 moving average. So you're just going to type in 33 and you're going to want to change the color on your 33 to gold and then you can hit apply. Now you can see we've got our 2 moving averages, our 65 and 33 on a 30-minute chart. High plus low plus close. Once you have those 2 on your chart, well, here is where we're going to be able to measure balance in the market. Now, if the market is balanced, we're going to be able to trade a specific way. If the market is not balanced, we're going to want to trade another way, right? So we want to understand where the market's trading at. Now, next on our bottom left chart, this is where things get complicated. This is going to be my custom envelope system. Now, these are not Bollinger Bands, okay? They're not Bollinger Bands. What we're going to do is we're going to pull up our studies. Now, this one's going to be a little bit more complex, so pay attention. So what we're going to want to do is we're going to want to add a moving average envelope. If you type in ENV, you should see moving average envelope there, okay? Now, a moving average envelope, what is this going to do? It is going to let us, well, we're going to specify our displacement, we're going to specify our length, and we're going to change a couple variables here. Because the goal is to build out this envelope system so we can predict or react to where we think price is going to go. Now, with our first moving average envelope, what we're going to want to do is leave displace as 0. We're going to change the length to 8, okay? And then where it says PCT above and PCT below, this first one is going to be 0.382, okay, for both 0.382. And now the price H and price I, we're going to change from close to high plus low plus close divided by 3. High plus low plus close divided by 3 for both. And we're going to change the average type from simple to exponential. So again, displace is 0, length is 8, PCT above is 0.382, PCT below is 0.382, price H, price I, high plus low plus close divided by 3, and we're going to change it to an exponential moving average, okay? At that point, you should be able to scroll down here. Well, we're going to change the color to green and hit apply and hit OK. And you're going to want to do that for the upper band and for the lower band. So we'll go to the lower band and we'll change that to green. Hit apply. So now we've got our first two bands for our envelope system. Let's head back to our study. We're going to want to add another envelope. So we're going to leave this place as 0. Our length on this one is going to be 8, and our length is going to be 8 on all of them. So length 8, displace 0. PCT above this one is going to be 0.181. 0.181. PCT below is going to be 0.181 as well. Same thing under price, high plus low plus close divided by 3 on both of them. We're going to make this an exponential. And then as far as the color, we're going to want to change the bands to red. Hit apply, and there we go. All right, next we're going to do another envelope. Length is going to be 8. PCT for this one is going to be 0.618. 0.618. High plus low plus close is going to be standard for all of them. The only thing we're really changing is PCT above or below, and then the color. So make sure it's exponential, right? And we're going to change this color to yellow. So we're going to click on yellow here. Going to click on yellow here, yellow or gold, right? Okay. Now let's go ahead. We've got one more envelope to add. You should be getting the hang of this by now. Length 8. PCT above on this one is simply going to be 1. PCT below is going to be 1. High plus low plus close divided by 3. Exponential moving average, and we're going to make this one blue. Okay, I'll use the default TOS blue. Hit apply. All right, so we're not quite there yet. We're looking good, but we're not quite there. All right, this will be our last envelope, I promise. Now for this one, length 8, PCT above is going to be 0.809. 0.809. High plus low plus close divided by 3, exponential. And we're going to leave this one as the default purple color, okay? All right, so now we've got our envelopes. Now we've just got to add one exponential moving average. So you're going to type in moving average exponential, and we're going to change the length from 9 to 8. And same thing here, high plus low plus close. Now for color, I'll make this a dark blue so we can really tell. I just want to quickly interrupt this video. I hope you guys are enjoying and taking some value away. Now, I did want to mention that I did just open up enrollment for my mentorship group. Seats are currently open, and I'm accepting new mentees. Now, I trade live every single morning. You'll be able to tune in and watch me trade. You'll be able to actually follow along and copy my trades. I'll send you my entries and my exits, and I'll teach you how to do all of this at the same time. If you're interested, I'll put a link in the description below. I hope to see you over there, and let's continue on with the video. All right, so now we've got our envelope system here. This is going to be my secret sauce. Now, this is how we're going to actually figure out and make the majority of our trade decisions, how we're going to manage our trades, where we're going to get out for a win or a loss. Now, next, top right, this one's going to be easy. We're just going to type in VWAP, the volume weighted average price. We're going to use the VWAP indicator, and we're actually going to leave all the settings as default. So we're not going to change anything there. You're going to hit apply. And on our bottom right chart now, what we're going to want to do is we're going to type in MACD. MACD, moving average convergence divergence. We're going to apply that to our chart. Now you can have that on your lower, or you can put it within price as well. So you're going to see your MACD there. Now, if there's a space on the side, if you're on TOS, you're going to open up the study, double click, left axis, you're going to uncheck, hit OK, hit apply. Typically, I like to see it overlapped on my chart. So now we've got our way to measure balance on our top left chart, our envelope system, and if you didn't catch it, all of our numbers here are actually Fibonacci numbers, okay? And then we've got our VWAP here, and we've got our MACD here, and we do have volume as well, okay? We have volume. This is not an indicator or study. I just have volume within my settings here under general. We can overlap volume, and we're going to overlap volume for equities. So what we're going to do, and if you can't see volume on TOS, you're going to click on settings. You're going to go to equities. Okay, so equities, and you're going to make sure that volume here is turned on, show volume subgraph. Now under appearance, what I do is I have my volume bars colored as symbol ticks. Okay, so you're just going to check that, and then that will give you those volume bars colored with symbol ticks. So your chart at this point should look exactly like mine. Now, here's what we're going to want to do. We want to understand what our blue line is here. We want to understand what our purple line is here. because both of these charts are going to represent what we would call our mean. Now, our mean is just going to represent our average price. We're going to use the mean in two scenarios. We're going to use them differently just based off of where the market's at. So for the first scenario, if the market is balanced, that is going to mean we're going to look at our top chart here. You can use this on any stock you're trading, but we're going to want to look and we're going to want to see that our two moving averages are 1, not touching, or 2, not crossing. If they're flat to each other, that means the market is balanced. Now, if we look back, we can see that when our moving averages come together, that is when the market moves to vertical. And that is going to be referred to the market moving from a position of balance to moving to a position of, well, not being balanced. So what we'll do is we'll often refer to a balanced market as a horizontal market, and we will refer to a imbalanced or not balanced market as a vertical market. And you can see here, this is not a crossover system, keep that in mind, but when our MAs do cross and when they come together, that lets us know that there's going to be a vertical move. Now, the market trades in vertical 15% of the time. It trades in horizontal 85% of the time. So 85% of the time when the market is balanced, we can expect that whatever asset we're trading, the price of that asset is going to come back to our middle blue, okay, our middle blue here on our envelope system. It is going to come back to our middle purple here. This is going to be our middle VWAP, okay? This is going to be our 8-day EMA. So whenever the market is balanced, which is 85% of the time, price is always going to come back to our mean. And our mean on our envelope system is the 8-day EMA, and our mean on our VWAP is going to be our middle VWAP. So now that you know that, the other scenario is the 15% of the time when the market goes vertical, when we get that cross and we see that vertical move, you need to understand that price will move further off of our mean. Now, if price is moving further off of our mean, we don't know where price is going to go. And at that point, it's a decision of how high and how low do we think it will go. When we trade strategies, we're often going to trade strategies that revolve around a reversion to our mean. Now, you can call this the reversion to mean program because we can identify if we're balanced, we are then prepared to see the market trade around our mean. So today's SPY, you could see how it traded around our mean the entire day. So we're going to use our bottom left and top right charts to identify where are we in correlation to our mean. We're going to use our top left chart to identify what market we're in, if we're balanced, if we're not balanced. And we're going to use our bottom right chart to gauge where buyers and sellers are getting involved, how aggressive those buyers getting involved are, how aggressive those sellers getting involved are, and in correlation to the degree at which buyers are getting involved and sellers are getting involved, how that would have an impact on market speeds. And based off of that, we can then determine how much more we have in that move. Now, MACD is often commonly used to trade MACD cross. If the lines cross, well, that would signal a directional shift, which we can look at in certain scenarios. But for the most part, what I'm using MACD for is to understand how far are we apart, okay? And how much more do we have to go before we come back together? And when we start pushing into either a vertical move and we see our moving averages diverge, well, we can then gauge based off of speeds how much more we have to go. If we're forming larger bars, so if we're seeing higher speeds, if our moving averages are moving faster as that stock moves, well, then we can look at volume and we can see, well, what is moving this market? Okay, and then on the other hand, if we start to slow down, well, when our MAs start to converge, we can then understand that there is a potential shift in direction. But who would be in control during that moment, and where are we relative to our mean? The MACD out of these four charts I use the least. It's going to help me at times, probably the least amount of times, right? But still, once in a while, I will use MACD. But for the most part, I'm going to be using VWAP, probably second most to my envelope system. So I would say in order of how much I use these charts, my envelope system is technically going to be number 2, right? Because without our top left chart here to identify if the market's balanced or not balanced, we can't do anything. So this is going to be number 1, this is going to be number 2, this is going to be number 3, and this is going to be number 4. Those are not in order of significance. You should understand and learn how to use all of these charts together. But we've talked about those 2 scenarios and how we can use these charts. Now, without dragging this video on for hours, I will tell you, you can tune into my daily live trading recaps, because every single day I'm showing you not just how much I'm making or losing, but I'm teaching you how to trade this system. I'm going through those examples of trades that I've taken to give you the exact blueprint on how you can do this yourself. All you have to do is subscribe, and all you have to do is tune into those daily videos. Now, if you want to trade live with me every single morning, I'll put a link in the description below to my mentorship group. I hope you guys enjoyed this video, and I will see you all in the next one.